Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our Forex news broadcast for Friday, April the 25th, 2008. Headlines out of Switzerland this morning read dollar rose after better U.S. employment report and large fall in German IFO index. The dollar rose across the board on Thursday after U.S. government data showed resilience in the labor market, while a key measure of business sentiment in Germany plunged, undermining the euro. The euro's fall followed an early week rally to a record 160.19 on Tuesday, the highest level since the euro's inception in 1999. Investors were betting the ECB would raise interest rates to restrain inflation. Analysts are saying the ECB policymakers' comments on excessive volatility in euro trading, combined with weak economic growth data this week, triggered a sell-off in the currency. In Germany yesterday, the data on business sentiment showed the biggest monthly fall since September 2001. The IFO index fell to a much lower than expected 102.4 in April, its lowest since January 2006. The IFO, coupled with a slump in the Eurozone manufacturing PMI to levels nearly implying an economic contraction on Wednesday, suggested that the Eurozone may not be immune to a U.S. economic slowdown. The euro-dollar was down at 156.76, below Tuesday's record high and its lowest in at least 2 weeks. The euro-yen was also down at 163.58, while the dollar-yen was up at 104.36. And the dollar Swissy rose to 103.56. ECB's President Jean-Claude Trichet said on Thursday that there is concern about the impact of currency fluctuations on financial stability. Analysts are saying that if anyone was betting on a rate hike sometime this year from the ECB, the IFO would have certainly reduced the chances. The dollar's gains come as investors look closely at whether the Federal Reserve might be ready to pause in its aggressive run of interest rate cuts after an expected 25 basis point cut in the Fed funds rate next week to 2%. The U.S. Central Bank has cut 300 basis points from its benchmark Fed funds rates since last September in an effort to stave off recession. A report on weak new U.S. home sales in March failed to provide lasting clues on the outlook for interest rates. Analysts are stunned by the euro-dollar sell-off yesterday, but are withholding judgment until they see the trading direction today and Monday. We have seen 5 late-week dollar buying in 2008, only to be reversed shortly after. However, the break below the 22-day moving average could be viewed as a bearish signal of the euro-dollar. In addition, the sell-off of the U.S. bill curve could have the Fed's ending its easing cycle with a final 25 basis point cut, and the corresponding sell-off in crude, with WTI falling 1.7%, were also bullish dollar signals. The euro-dollar was able to rally slightly to 157.07 in the Asian session, but was unable to hold and softened before the European Open. The trigger for the euro-dollar move was the weak German IFO data, which dropped well below expectations to 102.4 versus 104.3 that was expected. The Forex markets have been trading on the Eurozone inflation versus growth story and believing that the economy is slowing, with the conjecture that the ECB will be fully concentrated on handling the spiraling inflation pressures. This is the reason it is helpful to know what the fundamental data is that is coming out, but you need to be trading technicals to preserve your capital. The market clearly viewed this weak release as real evidence that the Eurozone might not hold up in the face of powerful global headwinds. The magnitude of the sell-off based on this single figure Remember, in March, the figure had surged to 104.8, is only adjusting from an already elevated position and is questionable. Once again, analysts are withholding judgment until they see some actual trading confirmation and are not ready to adjust their call for short-term dollar weakness. Overall, they don't believe the market sentiment has completely shifted in favor of the euro, and more positive data next week from the Eurozone economy will support a reassessment of yesterday's move. U.S. equity markets closed with gains on Thursday on a massive day of earnings when over 200 companies reported. The S&P 500 and the Dow Jones closed with gains of 65 to 70 basis points, while the Nasdaq closed with a gain of 1%. 6 of the 10 sectors closed higher, with financials leading the way, as AIG and Citigroup powered the sector higher. U.S. economic data out yesterday was mixed, but mainly ignored. The Asian markets opened higher, as the Nikkei and the Hang Seng were both up. The result from Samsung Electronics helped sentiments and boosted stocks, while the markets in Australia and New Zealand were closed for a holiday. European futures were expected to open slightly above fair value after a huge week of earnings. In Japan, the nationwide core CPI and the Tokyo core CPI were both up. Markets were focused today on the Michigan survey, since many of the main consumer surveys have been soft. The figure printed lower than expectations, and it marked a 28-year low. A light calendar today will allow us to gauge the market sentiment and trading behavior around the dollar. That concludes our news for today and for the week. We hope you've had a wonderful trading week. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you'll find information about our Traders Training Center, where our motto is Traders Helping Traders Succeed in Forex. You'll also find a link to our Forex Forum, also called Succeed in Forex. We hope you'll be able to visit us there soon. Have a wonderful weekend, and until we meet again, happy pipping.